Look, imagine you've saved up maybe $300,000 for retirement. Not millions, just a decent nest egg. You're planning to live on Social Security plus maybe $15,000 a year from your savings. And then you realize that depending on where you retire, you could either keep almost all of that money or watch $2,000 to $3,000 of it disappear every single year just in taxes. That's a vacation. That's your medical co-pays for the year. That's literally your entire grocery budget for 3 months. My name is Tax Shura, and I spend way too much time thinking about how retirees are getting absolutely destroyed by state taxes they don't even realize they're paying. If you're someone who's sitting on a modest retirement savings account and you're terrified that you won't have enough to last 20 or 30 years, make sure to hit that subscribe button and give this video a thumbs up if this helps you out. Here's the thing that nobody talks about. When financial advisors tell you that you need $1 million to retire, they're often calculating based on living in expensive, high-tax states. But here's what most people don't realize. There are 9 states in America with literally zero state income tax. Not low tax, zero. And some of them are shockingly affordable places to actually live. Now you might be thinking, okay, but those are probably terrible places to live, right? Like, there's gotta be a catch. And look, I get it. But a recent study from the Tax Foundation found that retirees moving from high-tax states like California or New York to no-income tax states like Nevada or Florida are saving an average of $4,300 per year. That's over $100,000 across a 25-year retirement. That's not just money, that's freedom. Let me break down the actual math here because this is where it gets really interesting. Let's say you're living in a state like Oregon, which taxes retirement income. You've got $30,000 coming in from Social Security, some of which might be taxable, and you're withdrawing $15,000 from your IRA. In Oregon, you could easily pay $800 to $1,200 in state income taxes on that IRA withdrawal depending on your total income. Now multiply that by 25 years, that's $20,000 to $30,000 that you're just handing over to the state. But here's what changes everything. Move to a state like Wyoming or Tennessee, and that $800 to $1,200. It just stays in your bank account every single year. And before you say, well, they must make up for it in property taxes or sales taxes, yes, some states do, but many don't, at least not enough to offset the income tax savings. Let's talk about the actual best states for low-income retirees. Florida's the obvious one, right? No state income tax, and they don't tax Social Security or retirement account withdrawals. But here's the psychological shift most people miss. Florida isn't just about the tax savings. According to the Census Bureau, Florida has the highest concentration of residents over 65 inches, the country over 21%. That means the entire infrastructure, the healthcare system, the social networks, they're all built for retirees. You're not an afterthought, you're the main demographic. But Florida's getting crowded and expensive. So let me tell you about some places that are flying under the radar. Tennessee. No state income tax, none. Your Social Security, not taxed. Your IRA withdrawals, not taxed. And the median home price in cities like Chattanooga or Knoxville is around $320,000, which is actually manageable if you're selling a house in a pricier market. Plus, Tennessee has relatively low property taxes compared to states like Texas or New Hampshire that also have no income tax. Here's another one, Nevada, zero state income tax. And if you're strategic about where you live, think Mesquite or Pahrump, not Las Vegas, you can find housing that's shockingly affordable. We're talking $200,000 for a decent place. The catch? It's hot, really hot. But if you can handle the climate, you're keeping thousands more dollars every single year. Wyoming is the one that surprises people. No state income tax, and it's one of the most tax-friendly states in the entire country. Property taxes are low. Sales tax is reasonable. And if you're worried about healthcare access, cities like Cheyenne and Casper have solid medical facilities. The psychological barrier here is that people think Wyoming is too remote, too cold, too isolated. But look, if you're on a fixed income, you need to be thinking about the math, not just your comfort zone. Now you might be thinking, what about property taxes and sales taxes? Don't those states just get you in other ways? And yes, Texas is a perfect example of this. No income tax, but property taxes are brutal, averaging around 1.6% of your home's value annually. So if you buy a $300,000 house, you're paying nearly $5,000 a year in property tax. That can completely wipe out your income tax savings if you're not careful. But here's the thing, not all no-income tax states have high property taxes. Alaska, for example, has some of the lowest property taxes in the country. Delaware doesn't have sales tax and has relatively low property taxes. You just have to do the actual math for your specific situation instead of making assumptions. Let me give you a concrete example. Let's say you're 65, you've got $400,000 saved, and you're planning to withdraw $20,000 a year plus, collect $24,000 from Social Security. If you live in Connecticut, which taxes Social Security for some retirees and has a top marginal rate of 6.99%, you could be paying $1,500 to $2,000 per year in state income taxes. Over 25 years, that's $37,500 to $50,000. That's not a rounding error. That's a car. That's a year of long-term care insurance. Now move that same scenario to Tennessee or Florida. Zero state income tax. That money stays with you. And compounded over time, if you reinvest even half of those savings, you're talking about potentially adding another $60,000 to $80,000 to your total retirement nest egg. Here's what most people don't realize. The decision of where you retire isn't just about taxes today. It's about the trajectory of your financial security over the next 20 or 30 years. Every dollar you save on taxes is a dollar that can compound, cover unexpected medical expenses, or just give you peace of mind when inflation spikes or the market crashes. So here's my challenge to you. Before you decide where you're going to retire, actually run the numbers. Not just the income tax, but property tax, sales tax, cost of living, healthcare access, all of it. Because the difference between retiring in a high tax state versus a no tax state could literally be the difference between running out of money at 82 or having a cushion that lasts until you're 95. The states are out there. The savings are real. You just have to be willing to think strategically instead of just staying where you've always been. And if this helped you start thinking differently about your retirement plan, hit that subscribe button and drop a comment telling me which state you're considering. Let's figure this out together. You've learned a lot in this video, but none of it really matters if you don't know whether you can actually retire with $100,000. So if you want to find out the surprising truth, just click on the video right here on your screen. I'll see you there.